banking crisis of 2023 is officially bigger than the 2008 was. Is the Federal Reserve trying to cause an economic depression? Yes, you read the headline correctly. Collectively, the three big banks that have collapsed in 2023 had more assets than all 25 banks that collapsed in 2008. Unfortunately, the banking collapse of 2023 is far from over. We still have 8 more months to go before this year is done. And many more banks are teetering on the brink of disaster. Fed stated U.S. banking system is sound. U.S. Treasury said the U.S. banking system is on a solid foundation. Meanwhile, the regional bank sector is down 40% this year. And the U.S. banking sector has lost $2 trillion in market cap, all while the Fed raised interest rates to a 16-year high. Is the Federal Reserve trying to cause an economic depression? I will explain it all right after this.
How you like that? How you like that? Look at you, now look at me. Look at you.
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my new website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the club today. The biggest losers of all are the shareholders and bondholders of these regional banks. They got completely wiped out. As I have always warned you, you only make money in the stock market if you get out in time. Shareholders of First Republic found out the hard way. The 3 banks that have collapsed so far this year were collectively bigger than all of the banks that collapsed in 2008 combined. The 3 banks held a combined total of $532 billion in assets, according to the New York Times, adjusted for inflation, is more than the $526 billion held by all the U.S. banks that collapsed in 2008 at the peak of the financial crisis. We are only 1/3 of the way through 2023. Charlie Munger believes there is trouble ahead for the U.S. commercial property market. The 99-year-old investor told the Financial Times that U.S. banks are packed with bad loans that will be vulnerable when bad times come and property prices fall. He is quite correct. In particular, the collapse of commercial real estate prices threatens to create a massive tsunami of defaults. A lot of real estate isn't so good anymore, Munger said. We have a lot of troubled office buildings. We have a lot of troubled shopping centers. A lot of troubled other properties. We have a lot of agony out there. We really are on the verge of the largest commercial real estate crash in all of U.S. history. And as mountains of commercial real estate loans go bad, a lot more banks will start to go under. The too big to fail banks will scoop up those banks that they like, while others are simply liquidated and go out of existence. Ultimately, I believe that we are going to see a wave of consolidation in the banking industry like we've never seen before. We are in the late chapters of this crisis. Much worse is yet to come. It is going to take a while for the dominoes to fall. But each time another one tumbles over, it will be a sign that the clock is ticking. And that time is running out for the US financial system. They actually did it, even though banks are collapsing. The commercial real estate market is imploding. Home sales are plunging, and large companies are laying off workers all over America. The Federal Reserve just decided to raise interest rates higher. This is nothing less than economic malpractice. They know that higher rates are crushing the economy. But they apparently believe that more pain is needed. Officials at the Fed just hiked rates another 25 basis points. And they are now the highest they've ever been since August of 2007. The Federal Reserve on Wednesday raised its benchmark interest rate by a 1/4 percentage point, but opened the door to a long-awaited pause. In the most aggressive tightening campaign since the 1980s, the unanimous decision puts the key benchmark federal funds rate at a range of 5% to 5.25%, the highest since August 2007, from near zero a little more than 1 year ago. It marks the 10th consecutive rate increases aimed at combating high inflation. When the Fed raised rates high in 2007, it didn't exactly work out so well, did it? The next year we plunged into the worst economic downturn since the Great Depression. In particular, higher rates will put even more pressure on hundreds of banks that are already teetering on the brink of insolvency. And when banks are struggling to survive, they get really tight with their money. And that is why we are now facing a big-time credit crunch. If the goal of the Federal Reserve was to curtail economic activity, what they had already done is already working. So there was no need to hike rates even more. Just look at some of the things that have happened over the past few days. For example, FedEx Freight will be permanently closing 29 locations. And Vice Media has announced that they are preparing to file for bankruptcy after attempts to find a buyer for a company. Once valued at $5.7 billion, it was going nowhere. Things weren't supposed to move this quickly. Just hours after First Republic Bank was dissected. 2 more major banks are in very serious trouble. Are the dominoes going to start to fall more quickly than we are anticipating? Regional banks will be under threat until the Fed cuts interest rates, said Jeff Gundlach. Who is wrong to say the Fed won't hike rates past 5% last year? Gundlach's comments came as California lender PacWest share price plunged 50% on the news. It's exploring a sale. Western Alliance falls 55% on news. It's exploring a sale too. Deposits are going to keep drifting out until the Fed cuts rates, the billionaire bond investor said. Both lenders, like First Republic, lost a lot of their deposit money during the first quarter, as customers sought the perceived safety of larger banks or higher yields being offered by money market funds. PacWest, a lender based in Beverly Hills, California, lost 17% of its deposits, and Phoenix-based Western Alliance lost 11%. Of course, PacWest and Western Alliance, they're not the only potential targets. In fact, one news source is claiming that half of America's banks are potentially insolvent at this point. We really are in the beginning stages of the next major financial crisis. Here is my client's collaboration book. It's already yours. Adversity Equals Success. Such an amazing book with such incredible authors. Order your copy today. And my client Ted Eazzy's book, Wicked Pussy Perfume, it is a femdom novel and it's about money, stockings, and the stock market. Order your copy today. It's such an amazing author with such incredible content. This one is an amazing one. You are such a good boy for watching my video right till the end. Bye.